9:58 a.m. Pacific Standard Time, 6/22/2013. It's a Saturday. We're going into Monday's trading with both sides of the market maker division. One is the equity, and one is the options. They both have support and resistances, and they have wholesale value to be bought and sold for a profit. So let's get involved with BIIB. BIIB has had a great correction from 242.50. I can tell you now, if you do where the low was right there where it broke down, you can clearly see it. It actually got, and that value there, the low, was exactly on a 60-minute buy level where the transaction needed to take place, was right around really the bottom of the wick is what we look at.
194.66.
So 194.66 was the bottom low, but where the buyer stepped in was at a higher level right around that 197.72 cents. So from the actual intraday lows, guess what happened? Something happened. The electronic buy tape, the electronic exchange, the high frequency models popped a stock. Within milliseconds, it was up. Within, let's say, less than a 3-minute bar, $3 and some change. And the buyer stepped in at the low end of this whole damn thing there. You can clearly see it on a daily level on BIIB. The most important thing about it is what makes it favorable is that you can clearly see right here at 195 it popped up. MMTs, I'm sorry, we were having a little discussion. It may have been on the tape, but listen, on a 60-minute market maker platform, each one of the lines are $1.32, and this is where we make our decisions outside of looking at a standard daily chart. We look at them, though, because we know that the public and the institutions make their decisions based on those charts. So when we go into our platform, what we're going to be looking at is why did we finally put in that bottom on this 60-minute level, 60-minute chart, BIIB. The next thing that we're going to do is find the call side of the market that we're going to go over, and we're going to start them at the 195. We're also going to go to the 200 to 205, and we will cap it at the 210 strike price. It is a 720 monthly contracts that we will be pulling up right here, BIIB. What we're going to do is go to a July regular 720. This will be the expiration date, MMTs. Not only that, MMTs, like I said, we're going to start with the 195, the 200 call, the 205 call, and the 210 call. We will also throw a kicker up above the market. If they're cheap enough, the 220 call can still pay a premium trade. But it's not, we want to be close to the dollar trade for the call side. The put side, well, we're going to take a look at that put side. The thing about the put side is we'll start the put side at the $210 in the money. The 205's in the money, so it will be 205, 210, 215s, and all the way up to the 220 strike level, because we can see what the values are going to be and the bid and ask of both sides of the market. So based on that shorter term support level in BIIB chart on a 60-minute level where bottoms were made, we showed where the 20-week moving average, and we showed you in a standard model where the 100 simple day moving average is, but this is where they turned the price, and a lot of it was options expiration. This will be one trade that will be on the downside. Risk has hit a level that as long as that support level is bouncing and everything is working in here and it's ascending in value, then we're going to get on that side of the market. I'm going to move on to the next trade. This segment for my MMTs, starting the rebalancing the quarter act in the market maker division. We're rebalancing. We need to know how to balance ourselves Monday. Is it going to be the call side or is it going to be the put side? for the calendar week starting Monday. Today's date is 6/22/2013. Let us not forget it's 10:15 a.m. Pacific Standard Time. Now, for the rest of the Trader Network that we have, you will already know what to do. So we got a major update on a daily. This is where that bull cycle, the support that came in, that was still a bull to trade long. And it's a daily movement. But we're right back down here. And what we're going to show you was that Friday's low was 408.10. So the actual volatility range in dollar price movement was $11.90 from the top down, and that was exactly mathematically one half delta is 541 and another half delta is 541. So you can see how accurate it is. The market maker platform, the diamonds were descending in mathematical value, which also supported the put side of the position. And when the put side would break out or pull back a little bit, but why would the puts make higher highs in dollar price value from your entry? Is the following. Is that you can clearly see from the top down there, at that point, when we were at the high range at 420, that range went all the way down to, in this whole range, it was $11.90, and I clearly said that. But the low was 408.1. So that meant that the put side got extremely inflated in dollar value. One of the things that we're going to be covering, and I just want people to know, in Apple, is we're going to be doing the following calls. And you need to know it. And you need to know which expiration is going to be used. We will use a weekly. Today is 6/22, expiration date 6/28. We'll use some of the weeklies, and in some cases, we'll even go out to a weekly 7/5. But for the short-term trading, the 6/28 expiration works very fine. So we're going to start with the 405 calls, the 410 calls, 415 calls, and 420 calls up and out of the money. Exactly where I showed you clearly. I'm going to show you clearly on the daily chart where the bottom was. But most importantly, when you take a look at your 60-minute market maker platform on Apple, you can clearly see where that low was. But listen, here's what I want to show my MMTs. Let us not forget it was a rebalancing. It was a Friday. When we hit those lows of that 60-minute bar, the total volume in the 60-minute bar to the upside here was 258,000. Let that be known. On this particular bar right here, which was in this particular 60-minute bar, was 194,000 and 980. So basically, when we take a look at the volume side bars at that bottom, from the bottom up side of the complete total 60-minute volume bar, this one was 115,000. So within the price, we know that they were jumping in. And so we got oversold here on the 60-minute level. Back to the daily level is that we want to be mindful if we're going to break 408, we're going to want to know what this half bar, this half 60-minute bar is going to be a support level down there should we come down and test it. That's going to be 403.88 pennies. And this half bar, 60-minute price action bar, was on 4/24/2013 MMT. That's your calendar date. That's the lower support level. Now, let's go over here to this green bar, and let's find the value at it. The value of this half bar, which it clearly violated, was 413.51. That's the MMT market maker half. It's half the price of that 60-minute. And you can clearly see where those bots and those diamonds were going higher in value. which means that these ratios go up in value. So let's just take a look at one thing. We closed, let's find the closing price to that half bar that I said, and the closing price is 413.5. This half bar value, again, MMT, is 413.51. That's how accurate we are. So we're closing at this half bar where the major part of the breakout occurred on a daily chart on Apple, but we had to define support 1 here if we want to go to a second support level to another half bar, which was created on 4/25 of 2013. That's $410.47. That would be your first support. The second support below that, but this is a real, this is where it all started. This was the confirmation of you break higher, you come back, you test a half bar, and bam, it's off to the races. So that lower end, which is much lower, is going to be 403.88. So we're going to do the calls and the puts as well. Here's the 60-minute bar. So here's where the breakdown clearly was, and mathematically we can go right back up. So relative to the call and put charts here, and just to give you an idea, MMT, the 628, this is a $405 call that got extremely low in price. So that's the deflated side of the market that we're going to look at when Apple holds support. That's a $405 call. Just to give you another idea, MMT, look at the 410 call. They're all deflated. They're not $45 a contract anymore. No, they're down here where the market maker knows where to make those transactions in the SMF market maker division. So, having said that, that's what we're going to be looking at. That's what it looks like. It's a 405 now. Let's find out where the 410s are. I want you to take a look at it. They're down here at $8. They're cheap. One of the things that we're going to do is that we're going to load these 410 calls. And on the 415 calls, let's just take a look and see where they might be roughly in value. Looks like we have to get those in there. That's a 410. So we'll try to drag and drop it over here. Nope, it's not letting us do it. So what I can say, MMTs, we'll load the 415s and the 420s right back up where the major reversal was. We'll start the put side of the market. We'll start the put side of the market where we'll look at the values in our other system there. We'll take the 420 put. Here's a 420 put. It's shot straight up to $9.40 from $1.80. That sucker shot straight up. It also represents the VXN fear indicator. They shot straight up. They're inflated. So guess what? I can buy for a short-term trade on premium. Of course, I'm going to buy at the market now. I always buy at the market, and I buy above the market. And there's nothing wrong with me going over here and throwing that $420 call in. If I can get that for about $1.20 MMT, that means that you can see where the call went from $32 down here to less than $3 intraday. So there are some up and out of the money calls that we will do in our other system, and I'm going to conclude it because that's on the call side. And the put side, MMT, here's a $415 put that we might be able to get over here. Here it is. Look at this one. No. That's the 415 put versus the 420, but look at it. It's up here in the inflated value. Yes, they can get a little bit more inflated, but they're going to come down. They're never going to stay up here. So, just like the calls would never stay up there. So, we have a rebalancing act. And we're going to be looking at these various strike prices. And I can tell you that this side of the market is not the side of the market that I would want to be on right now in Apple. They're inflated in the very short term and the very short pricing 5-day component, then 10 days. We'll look at all of these things in our other system. I have BIIB and the Apple trade set up here. So both calls and puts are structured.